Australia, a country renowned for its vast landscapes, natural resources, and vibrant cities, has long been regarded as a beacon of economic stability in the Asia-Pacific region. But as we enter 2025, questions surrounding the resilience of the Australian economy are becoming more pronounced. Could the so-called lucky country face an economic collapse? To answer this, we must explore its economic structure, current challenges, and the global forces at play. Subscribe as we dive in. Australia's economic story is one of resilience. For nearly 3 decades, the country experienced uninterrupted economic growth, largely fueled by its mining boom and strong trade relationships with countries like China. Even during the global financial crisis of 2008, Australia's economy managed to avoid recession, supported by prudent fiscal policies and high demand for commodities like iron ore and coal. However, recent years have tested this resilience. The pandemic in 2020 disrupted supply chains, strained public health systems, and forced governments to implement significant stimulus measures. While Australia weathered the immediate economic storm, it left behind a legacy of increased debt and vulnerabilities that remain relevant today. Before delving into collapse scenarios, let's examine the state of Australia's economy as of early 2025. 1. GDP growth. Australia's GDP growth has slowed to 1.8% annually, compared to pre-pandemic averages of 2.5%. While still positive, this decline signals underlying structural issues. The economy faces challenges such as high household debt, a cooling property market, and reliance on exports to China amid geopolitical tensions. Climate-related disasters and rising global interest rates further add to vulnerabilities. However, strong institutions, resource wealth, and emerging tech and service sectors offer hope. Proactive measures, including trade diversification and renewable energy investments, are essential to sustain growth. Navigating these risks will determine Australia's economic trajectory in 2025 and beyond. 2. Unemployment rates. Official unemployment stands at 3.9%, but underemployment remains a significant concern. Many Australians are working fewer hours than they need or want, leading to reduced spending power. This dynamic reflects ongoing challenges in the labor market, where job quality and security lag behind headline unemployment figures. Addressing underemployment is critical for boosting consumer confidence and overall economic activity. Policymakers must prioritize job creation and workforce development to ensure sustainable growth. In conjunction with managing inflation and housing market pressures, tackling underemployment will play a key role in strengthening Australia's economic stability in 2025. 3. Inflation. Inflation rates have stabilized at around 3.2%, but this follows a period of high inflation in 2022 to 2024. Households are still adjusting to the cost of living increases that impacted housing, food, and energy prices. These persistent cost pressures have strained household budgets, reducing discretionary spending and dampening economic growth. Addressing inflation's lingering effects requires targeted measures to alleviate living costs, such as subsidies for essential goods and increased investment in affordable housing and renewable energy. Stabilizing inflation while fostering economic resilience remains a key priority for ensuring long-term financial security for Australian families. 4. Housing market. Australia's property market, once considered one of the most overvalued globally, is showing signs of correction. Declining property values have left some homeowners in negative equity, further dampening consumer confidence. This downturn in the housing sector has also impacted construction activity and related industries, adding to economic pressures. Policymakers face the challenge of stabilizing the market without reigniting unsustainable price growth. Measures such as targeted assistance for first-time buyers and incentives for affordable housing developments could help balance market dynamics. Ensuring a soft landing for the property market is vital for preserving financial stability and supporting broader economic recovery. 5. National debt. Government debt to GDP ratios have risen significantly, now standing at 50%. While not catastrophic, this limits fiscal flexibility and increases exposure to global interest rate fluctuations. This debt level challenges the government's capacity to respond to future crises or invest in growth-stimulating initiatives. Rising interest rates globally further elevate borrowing costs, potentially diverting funds from essential public services. To navigate these challenges, a strategic approach is essential, focusing on streamlining expenditures, enhancing revenue through fair taxation, and fostering economic growth to reduce the debt burden over time. Maintaining fiscal health is key to sustaining Australia's economic resilience. Here are the key risks to watch out for in 2025. Dependency on China. Australia's economic relationship with China remains a double-edged sword. As Australia's largest trading partner, China accounts for a significant share of exports, including iron ore, coal, and agricultural products. This dependence has fueled economic growth but also exposed vulnerabilities. Geopolitical tensions have escalated in recent years, leading to trade sanctions on key exports like wine, barley, and coal. These actions highlight the fragility of Australia's reliance on a single market. Diversifying trade relationships is crucial to mitigate risks and ensure economic resilience. Expanding partnerships with emerging markets in Southeast Asia, India, and Europe could help reduce over-reliance on China and create new growth opportunities. Climate change and natural disasters. Australia's susceptibility to climate-related events poses significant risks to its economy. In recent years, bushfires, floods, and droughts have become more frequent and severe, disrupting agriculture, infrastructure, and tourism. For instance, prolonged droughts have led to reduced crop yields, affecting farmers' livelihoods and increasing food prices. Similarly, floods and bushfires have caused extensive damage to infrastructure, leading to costly rebuilding efforts. These events place additional pressure on government budgets, insurance systems, and local economies. Policymakers must prioritize climate resilience by investing in sustainable infrastructure, renewable energy, and disaster preparedness to minimize the economic impact of these events. Housing bubble and household debt. Australia's housing market has long been a cornerstone of its economy, but it also represents a significant vulnerability. Australians are among the most indebted populations globally relative to income, with household debt levels exceeding 180% of disposable income. This reliance on housing as an investment has driven property prices to unsustainable levels. A sharp correction in housing prices could trigger a broader economic downturn, as reduced household wealth leads to lower consumption and higher default rates on mortgages. To address these risks, policymakers must focus on ensuring a balanced housing market. Measures such as incentivizing affordable housing, regulating speculative investments, and supporting first-time buyers can help stabilize the sector and protect economic stability. Global economic instability. The global economic outlook in 2025 is marked by uncertainty. Slowing growth in major economies like the US, EU, and China could have ripple effects on Australia's export-reliant economy. Commodities such as iron ore and coal, which account for a significant share of exports, are particularly sensitive to global demand fluctuations. A downturn in global trade could reduce export revenues, impacting GDP growth and government budgets. Strengthening economic diversification and investing in high-value sectors like technology and renewable energy are essential strategies for reducing exposure to global economic shocks. Interest rate increases. To combat inflation, the Reserve Bank of Australia, RBA, raised interest rates aggressively between 2022 and 2024. While this policy stabilized inflation, it has also increased borrowing costs for businesses and households. Higher interest rates have slowed economic activity, particularly in the housing sector, where mortgage repayments have risen sharply. Businesses face higher financing costs, reducing investments and hiring capacity. Policymakers must strike a delicate balance between controlling inflation and supporting economic growth. Offering targeted relief to vulnerable households and businesses while fostering innovation and productivity can help mitigate the adverse effects of rising interest rates on the broader economy. Could Australia's economy collapse? While a complete economic collapse is unlikely, there are scenarios where Australia could face significant economic distress. Let's explore these possibilities. A severe recession. A combination of global and domestic factors could lead to a severe recession. For example, if China's economic growth falters significantly, Australia's export sector would face major losses. Simultaneously, high household debt could amplify the impact of a domestic downturn. Housing market crash. If property prices were to plummet rapidly, it could trigger a financial crisis. Australian banks, heavily exposed to mortgages, would face rising defaults, potentially leading to a credit crunch. Government debt crisis. While Australia's debt levels are manageable now, an external shock, such as a sharp rise in global interest rates, could strain the government's ability to service its debt. Climate crisis. An unprecedented natural disaster, such as a catastrophic bushfire season or widespread flooding, could derail economic activity and overwhelm public resources. To prevent these scenarios, policymakers must act decisively. Key areas of focus include reducing reliance on China by expanding trade partnerships with other countries, particularly in Southeast Asia, India, and Europe, is crucial for diversifying Australia's economic base. This approach could mitigate the risks associated with overdependence on a single trading partner and open up new opportunities for growth. Transitioning away from coal and gas dependency presents another significant opportunity. By investing in renewable energy and green technologies, Australia could create new industries and jobs while reducing exposure to global energy market volatility. Introducing policies to ensure a soft landing for the housing market is essential to address household debt concerns. Measures such as targeted support for first-time buyers and tighter regulations on speculative investments can help stabilize property prices and protect economic stability. Enhancing infrastructure and disaster response systems is equally critical to better cope with climate-related challenges, minimizing their economic impact. Finally, maintaining a balance between supporting the economy and ensuring long-term fiscal sustainability is vital. This includes prudent management of government debt and strategic investments in high-impact sectors. By addressing these challenges proactively, Australia can strengthen its economic resilience and position itself for sustainable growth in an increasingly uncertain global environment. Despite the risks, there are reasons to believe Australia can navigate these challenges. Australia benefits from a strong regulatory framework, a stable banking system, and effective governance, all of which contribute to its economic stability. These institutions play a crucial role in mitigating financial and systemic risks, ensuring confidence among businesses and investors. The country's transparent regulatory environment supports fair practices, while its resilient banking sector enhances financial security. By maintaining effective governance, Australia creates a reliable environment for both domestic and international trade, attracting investment and fostering economic growth. These foundational strengths ensure that Australia remains well-positioned to navigate economic challenges and sustain long-term prosperity. Australia is endowed with vast natural resources, especially critical minerals like lithium and cobalt, essential for the transition to greener technologies. As global demand for renewable energy solutions grows, these minerals are becoming increasingly vital. Australia's rich deposits position the country as a key player in the renewable energy supply chain, particularly in the production of batteries for electric vehicles and energy storage. This strategic advantage not only supports global sustainability goals, but also promises significant economic growth for Australia, helping it capitalize on emerging trends in clean energy and secure a prominent role in the future global economy. Australia's education, healthcare, and technology sectors are experiencing rapid growth, driving diversification beyond the traditional reliance on commodities. This expansion fosters innovation, spurring the development of new technologies and services that contribute to the economy. The education sector attracts international students, strengthening Australia's position as a global hub for learning. Meanwhile, the healthcare sector benefits from advancements in medical research and services. The technology sector is seeing significant growth, fueled by innovation in software, digital infrastructure, and startups. Together, these sectors create new economic opportunities, making Australia's economy more resilient and adaptable to changing global trends. Immigration is a key driver of Australia's economic growth, significantly contributing to the expansion of the labor market and increasing consumer demand. A growing population helps sustain the demand for goods and services, which in turn supports businesses and stimulates economic activity. Immigrants bring diverse skills and expertise, enriching the workforce and filling critical labor shortages across various sectors. Additionally, the influx of people boosts demand for housing, infrastructure, and essential services, further driving economic development. Overall, immigration plays a vital role in maintaining Australia's economic dynamism and ensuring long-term prosperity. While Australia faces significant economic challenges in 2025, a collapse is far from inevitable. The nation's history of resilience, combined with proactive policy measures and emerging global opportunities, suggests it has the capacity to overcome current difficulties. However, this will not happen without concerted effort. Complacency must be avoided, as the road ahead will require strategic and collaborative action. Policymakers, businesses, and citizens all have a role to play in addressing vulnerabilities and building a more sustainable and diversified economy. The ongoing shifts in global trade, climate change, and technological innovation offer both challenges and opportunities for Australia. By focusing on strengthening key sectors such as renewable energy, technology, and services, while continuing to manage natural resource wealth responsibly, Australia can better position itself for future success. Ultimately, the choices made domestically will be just as crucial as external influences in determining the trajectory of Australia's economy. In 2025, Australia faces a crossroads. With the right decisions and a united approach, it can thrive. Without them, it may struggle. This year will be a pivotal moment in shaping the nation's economic future, one that will resonate for years to come. Thank you for watching, and let us know your thoughts on Australia's economic outlook in the comments below. Don't forget to like, share, and subscribe. Till next time, stay informed.